Did you watch any baseball this weekend? Sports are back, or at least they're trying to be. Is that bad news for the stock market and for you investors? I'll tell you that coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. If you're new to this channel, hit that subscribe button, turn on notifications, and smash that thumbs up button. Does the return of sports, is that actually bad news for the stock market? I don't know. Did you watch any sports this weekend? We actually had live sports on TV. My family were big baseball players, but I gotta confess, I can't watch a full baseball game on TV. That's just hard to do. So we watched some. Not a lot though, but here's the deal. We're trying. July 31st, just later this week, the NBA is supposed to start. I'm a hockey guy, you guys know that. I played a little bit in college and played all since I was 3 years old. So big hockey guy, hockey family. And the playoffs, oh my goodness, if you're into hockey, August 1st, you're going to have tons of games every day. It is going to be like Christmas every single day if you're a hockey fan. So that's coming. That's coming, and that is good news. Does that mean bad news for the stock market? Well, it depends. Depends on this little distinction we've talked about before, and that is the difference between gambling and investing. Gambling is day trading. It's trying to buy a particular company and hope that you're buying it low and quickly can sell it later that day or the next day because of some quick momentum. It's just guessing. Investing is buying assets long-term that will appreciate. It's investing in the ownership of the world's best enterprises, and knowing in the short term you have no idea how that's going to work out, but over long term you've got a pretty good idea how that's going to work out. Okay, there's a difference. Investing is not gambling. Okay, investing is for the long term, and it's buying high quality investments over the long term, being an owner in the overall stock market or great mutual funds over the long term. Gambling is day trading, and I don't want to offend any of you that are day trading, but it's speculating. It's saying Tesla at $1,500 a share, it's actually going to go up to $2,000 a share by the end of the year. Like that's what that is. Gambling in the stock market is buying Hertz stock right now. And again, I'm not saying that it's not going to go from $1.50 to $1.75. I don't know. No one does. I know it's going to go to zero though. I do, because that company's bankrupt. So that day trading, those buying of individual stocks and trying to hope just for a quick spurt, a quick rally, that's gambling. That's not investing. Now, some people do it, and that allows the ability to make an efficient market, mostly efficient market for the rest of us to enjoy long term. But those are differences. So why am I bringing all this up in the context of sports betting? One of the theories out there, I don't have all the research, but I think there could be some truth to this. One of the theories out there is when sports shut down, the folks that enjoy gambling have started to gamble in the stock market. Let me give you a couple stats. Apparently, over 40% of those individuals that would watch a sporting event during a week are gambling on a sporting event throughout the week. 40%. That's a lot. That seemed high to me. And when sports shut down, you couldn't watch live sports, therefore you couldn't bet on live sports. Therefore, you look and see how many new Robinhood accounts, and Robinhood, it's a new way to invest in stocks, a tech platform only, and where you get very low minimums, where people can buy one single share of stock and be a Robinhood subscriber. And so the Robinhood subscribers, since sports stopped back in March, has absolutely skyrocketed. And apparently, now I didn't do this research, I read it online, that one of the holdings, one of the stocks, one of the companies that is most widely held across the average Robinhood account is DraftKings, is a sports gambling company. And so there's all sorts of confusion or curiosity, let's say, curiosity around, is a lot of the stock market's sudden rise since March. Gamblers trying to bid up and create a lot of more activity in the stock market than normally would be there, especially in some speculative types of transactions like buying Lemonade, this insurance company I told you about that did their IPO, and the price has tripled, making this company worth nearly $5 billion when they've never had a profit. Has this same speculation caused Tesla's stock, where their earnings, their revenue and their earnings, very similar to a year ago? Yes, they're profitable over the last 4 quarters, so they're eligible to be in the S&P 500, but that profitability has basically come on the backs of government credits that count as revenue. If you remove that, their revenue and their profits pretty much similar to where it was a year ago, yet the stock a year ago was trading at $250 a share. Today, it's, $1,500 a share? Is that the type of speculation that you could attribute to gamblers, sports gamblers, that have entered into the stock market because live sports haven't been around? It's possible. It's possible. Only time will tell. And it's interesting, if I were to make one last correlation, it's interesting that we finally have sports trying to start right now on this particular week. Because what else is happening this particular week? We're having the extra unemployment, the extra $600 a week that people are getting, that is dropping off, apparently threatening some 23 million people from being able to pay August rent and mortgage. So that's dropping off. We've got PPP dollars continuing to be used up. If your small business received PPP dollars, they use it over the next 8 weeks and can use it for certain things like keeping people on payroll. That's being used up. We've got the second quarter GDP numbers, the first release, that's happening later this week. And we've got Congress saying, Republicans saying that they're going to have a stimulus bill to propose. So all of these things converging. On top of that, we've got continued earnings coming out from some of the largest companies around. All of this is converging into this particular week. So we won't even know. There's going to be enough volatility. There's going to be enough activity going on in the stock market. We won't even know if these day traders, these sports gamblers turned day traders, have exited. We won't really even be able to tell because there's so much activity. But if you see more volatility, or if we see a decline coming in the stock market, it'll be interesting to see if that coincides with live sports coming back. What should you do about it? Know the difference between gambling and investing. Guys, I do both. I am a long-term investor. I am, and I have our core strategies, and I have our dynamic strategies. But then I also like to tinker with individual stocks. So I own some of my favorite companies. I just own them on the side. I'm not trying to make a quick buck and flip them, but I like owning these individual companies, even though I own them in my mutual funds over here. But because I watch Apple and I can watch Disney a little bit more, and it's just a little fun. So know who you are. Know who you are, okay? If you're an investing gambler, just know that. That's high risk. That's high risk. And you probably might not enjoy this channel much. You should be looking at trading channels. But for you investors, this channel is for you. And if you want to gamble a little bit, that's fine with your play money. But you're investing long-term in the best enterprises on the planet and owning them for the long term. You're looking to do so in a tax-efficient way, and you're looking to make sure that those investment strategies all fit with all 6 areas of your financial life. So just know the difference, know who you are. All right. As always, make sure you've got a solid investment approach and that it's connected with all 6 areas of your financial life. Talk to your CFP today so that you make sure you've got that in place. If you need a second opinion or need to contact a CFP, you can find one on our team. You can find us online, korhorn.com. That's Korhorn with a K, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.